Okay. So what we now need is a basic definition of price action. Um, okay. I don't know who Teach Us Lou is, but this is kind of not that type of forum. Okay, I like to joke and have fun too. So work with me a little bit. This is, not. I'm not here to waste everybody else's time. This may come as a shock to you. Some people actually want to learn something. Okay. Um, and I know you didn't mean any harm, teachers. Okay. I'm very sure of that, but I just want to try to keep it pretty civil here. John is asking, will there be a new link? No, it will be the same link every day. Well, what happened this morning, John, was we had a bit of a glitch with getting everybody in the room. So there was nothing wrong with the link. And, they worked it out on the tech side back there. They did an excellent job. So for right now, I just assume it'll be the same link. And if not, we'll definitely let you know ahead of time. Okay? So, so what exactly is price action? Okay, now price action has been talked about for ages as being the best indicator a trader can use, but it is often overlooked in favor of various indicators with flashy colors and interesting sounding names. If the truth were told from the start, you would understand that all indicators are based on information derived from price. This is not to say that indicators are not useful, but since they are dependent on price for their creation, it would make sense to study pure price first and learn as much as we can from it before we venture off into the wonderful world of indicators. Um, Once we understand price action basics, you get a real sense of what is going on in the market and we'll be in a better position to take advantage of it. Now, this is from an old document. I was teaching at a firm in New York, and they went belly up. The two partners from two different parts of the world and cultural differences and all that. It just wasn't a good fit. Now, Michael is saying that my voice is breaking up. Is anyone else having that same issue? Um, okay. All right. I'll keep going. I'm not sure what that is, Mike. Um, okay. So price action, and this is my definition now. Okay. Price action is the natural movement of the market made up of consistent, repeatable patterns. Now, the reason I call it the natural movement of the market, because the part of nature that's involved in making all this happen is human nature. Okay, humans are creatures of habit. We are, just it's ingrained in us. When you wake up in the morning, you put the same sock on the same foot first, and you've been doing it for years, and just probably never dawned on you which one you were doing first. You got me? If you were to walk a mile and someone were to measure each of your steps from heel to toe, you'd probably not be more than a millimeter off in every step in that mile. It's just built in. It's a natural sort of thing. So when we look at the market, we're going to be looking at people's reactions and people's buying and selling habits. Okay, and our job is to learn to interpret that and then try to turn it into cash. Okay, so price action is the natural movement of the market. I have to clean this. John is asking me about this document. I have to clean it up, John. And I am going to have a place where everybody can go and download the different documents and PDFs and stuff that I share when I teach. All right. Um, Price action is the natural movement of the market, again, made up of consistent, repeatable patterns. Price action is also said to be the picture of the thinking or psychology of the buyers and sellers at every given point in time. Now, price action, this is Uncle Lou's version of it, okay? So understand that. You may see this someplace else in a different form, or maybe you've never seen it, but this is what works for me. Price action is made up of 4 building blocks, okay? And those are the four things that price can do on a chart. And yesterday I mentioned, think of it like a Lego or an erector set where the kids can build little houses and stuff and they fit all the pieces together. This is the same thing with price action. So price action is made up of four building blocks, and I define them as the uptrend, the downtrend, the sideways or consolidating market, and an immediate reversal, an instant reversal, I call it also sometimes. And these are the only four things that happen with price, the only four. Okay? All charts are made up of these four components, but they don't follow each other in the same order, which is why markets seem to move in a random fashion. So what happens is you may have an uptrend, and then when the uptrend's over, it consolidates, and then it starts a downtrend. All right? Or then you may have a consolidating market that turns into an uptrend, but then after a couple of candles, it turns into an immediate reversal. All right? And then it could turn into a downtrend. So it's going to be one of these four. How they're put together, how they lay on top of each other is what makes the market look different every day. Okay? Now, inside of these building blocks are four candle types that make up the building blocks. Now, if you think of a Lego set, you know that the Lego is a little rectangular piece of plastic, but it's got 6 nubs on the top, or 8 nubs, depending on, you know, what type of set you have. And the DNA, as I like to call it, of price action is in those specifics, or in those nubs on that Lego block. So inside of these building blocks are four candle types that make up the building blocks. You have long candles, and these are candles that close higher than they're open. I need to change that. Short candles are candles which close lower than the open. Then you have indecision candles like dojis and spinning tops. Then you have what I call breakout candles. Okay, and these could be pin bars, inside bars, outside bars, bullish, bearish, engulfing. So inside each of these, you have these candles doing their thing. So inside the downtrend, we have long candles, we have short candles, we have indecision candles, and we have breakout candles in the downtrend. And we're going to go into how they all work together and what they all do. So I'm going to go to a chart. And as I did yesterday, I prefer, and I have robots and stuff running in the background. So if you see pop-up boxes, don't, let it worry you too much. I'm going to ask someone to give me a pair. What pair do you want to look at? And as I explained yesterday, the reason I do this is so that I'm not handpicking, the perfect chart. Like a lot of guys, they handpick the absolute perfect looking thing. And okay, so HA got in first with the pound dollar. And let me just pick somebody. Calzone, could you give me a time frame, please? I see someone there named Calzone. Okay, so Calzone is saying 15 minutes. So the reason I do this is that if I handpick the perfect chart where everything's already set up, you don't know whether or not I'm bullshitting you or not. So if you pick the chart, you get me? And you pick the time frame, it gives it more of a random and real-time look. Okay? So what I want to point out here, let me just open this up. I just want to show you the four parts of this, okay? So here's a downtrend. Okay, downtrend has a specific behavior in it. Here's an uptrend. Okay. Here's another downtrend. So we went downtrend, uptrend, downtrend, and then we hit a consolidation. All right. And then after this consolidation, we went into an uptrend. And then after this uptrend, we went into a consolidation again. So you see, it's the same four pieces. You just don't know which ones are going to be sat next to each other. And then we had a bit of a downtrend here, and then look what we had here. We had more consolidation. It's the same four blocks over and over and over. Our job as a trader is to be able to turn a chart on and look at the chart, and we should be able to figure out, or hopefully figure out, where am I in this whole scheme of things? Which one of these four building blocks am I looking at right now? And then once you discover which building block you're looking at, your next question would be, okay, how do I trade that if that's what I trade? You got me? Just because you're in a consolidating market doesn't mean you have to trade it unless you have a trading plan designed for consolidating markets. Do you understand what I'm saying? If your trading plan is a trend following plan, the minute you see a consolidating market, your next job is to get the hell out of there and go find a trending pair. If you are trading, if you are a support and resistance trader, well, then you may want to stay on the consolidating, you may want to stay in a consolidated market, because that's where you make your money when prices bounce back and forward. You follow me? So it's important to understand, where are you in the grand scheme of things? And again, just to finish this out, we went into an uptrend, and then we turned around. We had no consolidation here at the top. You see that? It didn't go sideways. It went up, and in one candle, bam, that's the instant reversal. One candle. Okay, normally when price drops, you get all this sideways. I call these piano keys. A white one, a black one, a white one, a black one. And that's people building up orders. And they're all building up orders against each other, trying to figure out which way this market's going to break. That's why you get, all this sort of stuff. All right, these sideways markets. Then we had a nice, healthy downtrend. And we're still technically in a downtrend because we did not make a new high. We have not made a new high yet. Okay, so we're still technically in a downtrend. But this was very, very tradable, by the way. Okay, it doesn't look like it now. Okay, any questions just on that concept, that we have four building blocks? And I just want to show you something here. One of them I left out. You see this brief downtrend here? And I want you to see on one candle, it went completely the other way. On this one candle, when this candle finished, the market just took off. That's an instant reversal. Most of the time, we're looking for a price to drop and consolidate, or we're looking for a price to rise, as it did here, and then it consolidated right here. But there are times when it's just not going to happen. Okay? So you see the building blocks. Let me draw a couple of consolidated markets so you can just get an idea what they look like. Okay? Now, the beauty, why did I get this extra pop-up box here? Okay. And here's another consolidating market. Okay, so remember, it's a downtrend, an uptrend, consolidation, or an instant reversal. Like this is not one of my textbook instant reversals down here, but it does illustrate that when we got down to this low after this long run down, we didn't make 2 or 3 little indecision candles. The decision was made right here that they were going long and they weren't coming back. So that's an instant reversal right there. Okay, Phil is asking, do we need a close above the last high to say the trend has reversed? I generally look for that. And when we get into consolidations and how consolidations take on 3 or 4 forms, and then we'll touch on that. All right. And someone else is writing. I just want to catch these. George is asking, is it better to follow a method based on consolidating phases, knowing that 70% of the time the market is in a consolidating phase? Yes and no. It goes back to something I said earlier. Do you trade consolidating markets? That's what you have to ask yourself. Do you have a game plan to trade consolidating markets? Okay, if you have a game plan, do you know how to recognize a consolidating market quickly so you can get in early? So you can't look at it that way. Say, maybe we should concentrate on consolidations because that's where the market is 70% of the time. That's fine. Your trading system, your trading method has to fit you the way a tailor fits a suit to you. Okay, you may want to trade consolidating markets, and it just might not be in your brain set, that you just don't see it. You get me? What I want you guys to try to understand is um, uh, see what fits you, okay, and try to develop something around that. Now, I'm trying to read these questions too. If what time frame do you base your trades on? I base my trades on all time frames. Okay, my personal trading, I trade all time frames, and as we go through price action, you'll see why. Okay, because price action is fractal, and by that I mean it will work on any time frame. All right, so this is a 15-minute time frame of the pound dollar. Let's go to a daily pound dollar and look at what we have. We have the uptrend, and then we have the consolidating market, and then we have the downtrend, and then we have the instant reversal. One candle, bam, we're out of here. Okay, and then we had another instant reversal, back to back, bam, we're out of here. Okay, and then we had another uptrend, and then another and then another downtrend. So you see, these things exist in all markets. We had a consolidation right in here. I missed. Here we had a consolidation. Okay, the candles kind of bounced around. All right, here we have a consolidation. Okay, here we have a consolidation. So I want you to see that this works on any time frame. Let's go to a 1 minute time frame. All right. Let me just get close to the time here. All right. Well, this is pretty obvious. This is a downtrend, right? And this is pretty obvious that it's an uptrend from that point. And then mixed in here, you've got some consolidations. Okay. And the 1 minute chart looks a little, ratty because the data comes in different. But I just want you to see that this works everywhere. This is a consolidated area here. All right, everyone see that? Let's take a look at. Oh, someone give me a different pair and a different time frame, and we'll look at the same thing. Euro CZK. I don't know if I have that here. Euro CZK. I don't see that, and okay, John is in with Euro Aussie was the next one, so let's go Euro Aussie then. Okay, here's Euro Aussie, and Daryl, give me a time frame, please. Is Daryl there? Okay, I wanted a time frame from Daryl, but he didn't type it in. So Roger Hyde typed in M5. So I'm going to go to an M5 chart. Okay, now if you look at the M5 chart, I'll just start right here. It doesn't matter. We have the uptrend. Okay, we have a 3-candle downtrend followed with consolidation. We break out of consolidation and we have a bit of a downtrend. And then guess what? We consolidate again. And again, it's the same for building blocks. Here we have a pin bar at the bottom, and this is instant reversal. Instant. The minute this was done, price took off. It was gone, out of there. Went out, and then we consolidated again up near the top. And then we had a downtrend, and then we had some consolidation here. Okay? And then we had an uptrend. I'll just finish this chart out. And then at the top of the uptrend, what did we have? We had more consolidation. So you see, it's the same 4 things: uptrend, downtrend, consolidation, and instant reversal. It literally doesn't matter what time frame. This is all fractal. Our job is to understand where am I right now, and then how do I trade it. Okay. Mike is asking, how does this help in looking forward for price moves? It helps, Mike, because once you understand where you are, you can structure a trade plan around it. Now, understand nobody can guarantee where the next pip is going to go. Nobody. Okay? But if you're working with patterns that have a history of repeating themselves, if you're looking at price action that shows a repeatable, usable setup, well, then you're trying to put the odds in your favor. But nobody alive knows where the next pip is going to go. So you don't think in terms of predicting. Think in terms of this is where I am now, and where is it likely to go after that. All right, Mike? Are there any questions on this part so far? It's important, if you got any questions, I don't like to leave anybody hanging. When people are learning a subject, I just want to throw this out there quickly. It's been my experience that if they ever come across a single word or a single concept that they don't completely understand, if they don't get that answered, they are lost from that moment on. Okay? So make sure, please don't be afraid to ask. There's no such thing as a dumb question. Okay? And I'll just finish this out because I want you to see the concept. We are a different time frame now, and my phone is ringing. Consolidation, downtrend here, consolidation. Okay, you see that? Now we're going to learn. Okay, thanks. I'm glad it's not you. I didn't want to talk to you anyway, DJ. Okay, so as you can see, the four building blocks are there on every single chart. Our trick is to understand where we are. And I keep repeating certain things over and over and over because it helps burn it in. Okay, helps to burn it in the brain. All right. Let's do one more time frame and one more pair. Oh, in fact, you know what I'm going to do today because I opened up a different broker. American Express. Let's see. Caterpillar is a fairly well-known stock, so I'm going to put a stock of Caterpillar up here. I mean, a chart of Caterpillar up here. Because I want you to see how fractal this is and that it's human nature we're looking at. Okay. And this is Caterpillar now. This is not Forex, but there's our uptrend. All right. And here's a big piece of consolidation going on right in here. After this bit of a downtrend. Oh, wrong tool. After this downtrend. And then after it dropped down a little bit, it went into more consolidation. And then it went into an uptrend. Okay. And then it turned around. Gave us a brief downturn, and then it went into more consolidation. All right. So the same thing. We have the uptrend, the downtrend, the instant reversal, and consolidation. All the same thing. And this is on a stock. Someone's mentioning gold. Let's take a look at gold. Okay. And I just want to get it to near current time. I'm not okay. And again, we are clearly in an uptrend, but you'll see here that here we had a push up. What happened? We have a push up and then consolidation. We have the uptrend rather in consolidation. And then the uptrend continued. Oh, wrong tool. And then the uptrend continued. And then we had consolidation. And then the uptrend continued, and we had more consolidation. Okay, let me get that right. But do you see that? And then we had a bit of a downturn here, and then more consolidation. So it's the same thing over and over and over again. And now, having said that, who asked me for gold? John, which market are we in right now on gold? I'm asking John, where does he think we are now as far as price action? And H, your name is not John. Okay, thank you, John. Yeah, we're consolidating. But again, this goes into some of the psychology, and I ask myself questions, as to why things happen. We went from this low up to this high, and let me see how many points that is. That's 100 points, okay, or a $1 move, I guess, for the gold traders. They would know better, okay. And yet, all of a sudden, all these traders all over the world in gold now can't make a damn range much larger than 18 cents. You see that? That's kind of weird that all this power and energy, that much money to move gold a whole dollar and change in one direction, all of a sudden they all got chicken. Why did they stop? Oh, $1.80. Okay, thank you, Tony, for clearing that up. And again, see, I don't even need to know how they price it. But I know that how the market's going to move. I have a good idea how the market's going to present itself. All right, so that's a $1.80 move, and yet look now. Well, this is 18 cents, is what I was saying, Tony. This consolidated box, right? Help me out here. Oh, that's a $1.80. Oh, the uptrend was $10. Okay, thank you, Tony. Thank you. Again, I don't trade gold on this platform, and the numbers display a bit different. Okay. All right, Tony, thank you for that. I appreciate that. But again, going back to what I was saying, now we know we're in a consolidating market. So this is good that this happened. Your next question, do I trade consolidating markets? And if I do, how do I trade them? Or you'll say, I'm going to leave this because I don't know, I don't have a system for trading sideways markets. I'm going to go find something that's trending or whatever your specialty is. Does everybody follow that? All right. Now, the next thing that I want to break down is now that we have the 4 building blocks, I want to break down the inners of the uptrend and downtrend. I want to pull that apart, and I want to see what makes an uptrend. If someone said build an uptrend, what would I need to build it? Everybody follow me on that? Okay, so let's get a time frame. Bear Hamster, give me a time frame, please. Bear Hamster, okay, he's not responding. Oh, there it is, he's typing. Okay, time frame is 4 hour. And let me see who else is in here. Phil, Joe's guy. Phil, give me a pair, please. Oh, Bull Hamster. I call him Bear Hamster, unless there are 2 of you in here. Phil, if you're here, could you give me a time frame? And I'm talking to Joe's Phil. Okay, 15 minute. Oh, I'm sorry, Phil. I'm sorry. Give me a pair. 4 hours is the time frame. I need a pair. I apologize. And again, I'm not trying to handpick. I'd rather you guys pick it so you see that what I'm telling you makes sense. Okay? Anybody give me an idea where we are right now before I go into that? What kind of market do you think you're looking at? Okay, very good. DT is downtrend. Okay, very good. Yeah, everybody's kind of on the right track. We're in a downtrend. Let me get the tool. We're in a downtrend, and this is the pullback of the downtrend. And right now, that pullback is consolidating. See that? We had the downtrend. Okay, now this is the pullback of the downtrend. All right, and now it was consolidating, and it just broke consolidation to the downside. All right, so we may get a little downward push on gold. on the Dollar Chef. But now what I want to talk about right now is if I had to build an uptrend or a downtrend, what pieces do I need? Okay, and I'm going to break this down. And let me find. All right, we'll do downtrend. This one looks, pretty easy to explain. Okay, I just want to make sure I get all the questions because when I'm looking at the chart, I have to shift eyes to look at the questions. So we're going to build a downtrend first. So remember, think in terms of Legos. In order to build a downtrend, I first need some down candles. And what is a down candle? What is a short candle? It's a candle that opens at one price and closes lower than it opened. Okay, this may sound elementary to everybody, but it's going to be very important later to really understand the distinction. So that's the first thing I need in a downtrend, is that I need price to have candles open and close lower than where they started. This candle opened here, it closed lower than where it started. This candle opened here, closed lower than when it started. So I need some down candles. Okay, good. That's the first building block. I need down candles. Okay, and we've got those right here. All right. The next thing I need is I need some pullback candles, because in a downtrend, let me do this way. In a downtrend, price pushes down in the thrust direction or the impulse move or the trend direction. There's a lot of names for it. But in a downtrend, you get a push down, generally 3 to 5 candles, and you get a pullback of 2 to 3 candles. And then you get a push down again of 3 to 5 candles, and you get a pullback of 2 to 3 candles. And then you get a push down again of 3 to 5 candles, and you get a pullback of 2 to 3 candles. Okay, now those are general. That put that 3 to 5 down and 2 to 3 pullback. It's usually it's a general number. Okay, you got it. It's not going to happen every single time, but it's a guideline. It's a decent guideline to use because it can prepare you for an exit, or it can warn you of an impending situation you might not want to walk into. Now, Michael is saying 1, 2, 3s. Now, if you're talking Elliott waves, that's a whole other thing that we will get to, because Elliott waves are its own science in its essence. Joe is asking same in every time frame. We're going to cover that in a minute, Joe. All right, but did you see this now? 3 to 5 candles in your direction and 2 to 3 back. All right, that's what downtrends do, and they do it religiously. Let's take a look at an uptrend. All right, I'll pick this one. Not quite textbook, but I'll take it. So here in this uptrend, we have 3 to 5 up, and this is I'm gonna take this as a 2 to 3 back, and I'll explain that later. And then we have 3 to 5 up, we have 2 to 3 back, we have 3 to 5 up, and we have 2 to 3 back, and the same thing over and over. So to build an uptrend, I need candles that start at one price and close higher than when they start. And that's what all of these candles are doing. They close higher than when they start. The wicks in this case are not important, okay? I'm only looking at building an uptrend. If someone said, hey, I got all this stuff, build an uptrend for me. So you need, we're not talking about the Ross hook either. Ross hook is another thing from Joe Ross that's also very good, all right? We're only talking just candles, just DNA of price action. All right. And all the things that you're posting are valid, but I want to keep this locked in on just the pure, because if you didn't know Joe Ross and you didn't know the Ross hook and if you didn't know Elliott waves, you should still be able to make money. Okay. That's my intent on what I'm trying to explain to you. Okay. Just with a naked chart. If you got locked in a cell and they said you can't get out until you come up with a trading system that'll give you 3 winning trades in a row and all you have are candles, trust me, you will pay more attention to these candles than you have ever paid in your life to get out of that cell. And you would eventually come up with something. Okay? Now, So if I had to build a downtrend, let's go back there. I need candles that close lower than where they started. Now, I have to have in my downtrend, I need to have the thrust down, right? I need to have the thrust down. So we know the thrust down is made up of candles closing lower than when they started. Now I need to build a pullback. What do I need to build a pullback? And this is a little bit of a trick question. Okay, in order to build a valid pullback in a downtrend, what do I need? Mike is saying up candles, kind of, sort of. John is saying reversal candles, kind of, sort of. Okay, Cam, yeah, you guys that were here yesterday kind of know the answer. Okay, I see Cam and Tony. Okay, pull back. Now, Cam and Tony, well, Cam has the closest answer. Cam's answer was that you need 2 higher lows. Okay, so if I had to build a pullback, what I'm looking for in the pullback is I need to see 2 candle wicks where the second one is higher than the first one. So you see here, after these 4 candles down, we have this wick. And now the next candle forms, and when it's done, the wick of this next candle is now higher than this one. That's my signal that we could be in position for a pullback. Okay, that's how in one candle I can say, okay, pullback's getting ready to come. All right, now if I'm in a trade and I see this happen, this might be a time to exit if you can't stomach the ride. And by stomaching the ride, I mean if you entered up here, let's say, and down here you're up 60 pips, and you stayed in the trade, and all of a sudden you went from up 60 pips to only up 12, that would just panic the daylights out of a lot of people. All right, would scare the shit out of a lot of people. So some people don't like that ride on the pullback. They'd rather get out and then let the pullback finish and then re-enter and take some more money that way. So once you see this higher low on the candle wick, and the reason John, when you said reversal candles, is that these candles don't necessarily, this did not necessarily have to be a black candle. It could have been a white candle with a higher wick. You follow me? And then I'd wait to see what the next candle would do beyond it. But what you need to see to build a pullback is you need to see 2 higher wicks. And then when you have those 2 higher wicks, you can put a trend line across it. And that could be a bit of a guide to offer you a signal to get back in the trade after the pullback is finished. Does everybody see that? So to build a downtrend, I need short candles. And we're breaking the downtrend down now. Write down candle by candle what you need to build it. We need short candles. Short candles are candles that close lower than when they opened. The next thing I need to make a downtrend is a pullback. Okay? So in the pullback, what I'm looking for are 2 candles initially where the second candle wick is higher than the first one. That's the beginning of a pullback. It doesn't mean that you're going to jump on it right now. You follow me? But you're prepared. Okay? You're prepared that a pullback may come. And then you can adjust. You can take some of your trade off. You can move your stop loss up once you know where price is going, and you'll find out in one candle. Okay, where that candle wick is higher than this one. And again, if I repeat myself, bear with me. And just so you understand my teaching style, I say things the same way 4 or 5 times because in the semantics of English, some people may pick it up if I say it this way. Other people may pick it up if I say it that way. I enjoy teaching. I kind of studied how to teach, so that's where that came from. So if you hear me say things over and over slightly differently, that's the reason for it. All right? So in order to build a downtrend, I need down candles. I need higher lows on the candle wicks to build the uptrend. Okay? And then after that, what do I need? I need more down candles. Okay? So we had this situation here. And now this downtrend is over. Okay, we closed, nice bearish engulfing candle here. You see that where this candle took out all of this work, took out all of these. Now we're back, into the downtrend again. But look what happened. Here I have a candle wick, and the next candle wick is higher. You see that? Okay, so then this could be another trend line. Now remember, at the time I do this, I can't see all this other good stuff here. You got me? I have to draw what I see in real time at that moment. That's very important. And Mike is asking, Mike says, but price fell, then rallied without the two higher lows. I'm not sure what you're asking me, Mike. And bear with me, everybody. I would like to try to answer his question if I can, but I don't understand what he's saying. Okay, until he finishes typing. Again, we have a little bit of a downtrend here. It's just one candle. And then you see we have the two higher lows. You can put a trend line here. And then we go down again. Okay, we have we need lower closing candles. We need down candles to make a downtrend. And then to build an uptrend, I need two higher lows. And that's right there. Now remember, when I draw this trend line, I can't see what has happened in the future. There were four candles lower than one candle that made a lower low, then shot back up with only one candle. I think you're talking about right here, Mike. Just a Y. Okay, well this candle did close lower than it opened, so it is a down candle. And I'm talking about building a downtrend. To build a downtrend, okay, the one before it. This one, Mike. I had one higher low, not two. Where is that? Over one. Is it here? Third yellow line from the left. So 1, 2, 3. This yellow line you're speaking of, yes? Phil? Okay, and what is it that you're not seeing? Okay, Mike is saying it would take a lot for him to put it together. Okay. I'm not sure what I'm explaining wrong. Is there anyone else that's not grasping this? Where I need, the two higher lows? Let me move this. And again, you see this low? Well, this candle was higher than that one. The low, meaning the bottom, the wick. Maybe I said it wrong and I just didn't realize it. You need a higher low. Okay, wait, let me clear that up because maybe that's throwing people. This wick on the bottom of these candles, that's the lowest point that candle traveled in that hour. What are we on? We're on H4. So during this 4 hours, this is the lowest point that candle went to. Okay. Yeah, this is the lowest point. So the bottom of the wicks are the lowest points of those candles. And what I need is for a candle to occur that makes a higher low than the prior one. So if this was the lowest low of this candle right here, let me put a box on it. I want to make sure I get this right for you guys. That low, if I get another candle that makes a higher low, this low is higher in price than this one. That constitutes the beginning of a pullback. Yeah, Cam, go ahead, say something. I want to make sure that you guys get this. It's hard for me to know if you understand it. Oh yeah, well, Tony, I totally understand this. I've worked with Mike a couple of times privately, and sometimes there's some concepts that Mike uh, struggles with a bit. Okay, yeah, if you're looking for absolute certainty, get married, and you'll always know what to do because you'll have someone there to tell you, and that's just a joke. Speaking from experience. Okay, so now Bull Hamster is saying that yeah, I just want to just do something here really quick, and this will help a number of you, I believe, sort some things out. Um, just give me a second, and I want to make sure that I cover this. And again, to those who already have this and they've got it, please bear with me. I want to make sure that they get it because there may come a point where I go over something that you may not get, and I'm just hoping that you understand that I'll give you the same time I'm giving to these guys in order to make sure they have it pat. Okay. Um, I'm just typing something here. Just give me a second, and I want you to see something. Um, okay. Okay, let's go with this one. All right. Um, can you guys see my screen here? Let me see if I can do this full screen. Wait, maybe there's a way to get this full screen. Oh, there we go. All right. Do you guys see my screen? Okay. This is by an artist called Norman Rockwell. Okay. Now he's an artist. He's a famous American artist, and one of the things he was so famous for was the unbelievable detail in his paintings. Okay. If you look at this looks like a boxing glove right here in the middle there of his chest, and you see the creases in the leather. Do you see that? And you look at the scarf, you see each individual twine on the scarf. I want you to look at the detail in here because this is what he was known for. Absolutely perfect, beautiful detail. And this is what, if I talk about a head and shoulders pattern, or if I talk about higher highs or higher lows, some people want to see it in such perfect detail that it looks like a Norman Rockwell painting, where every little thing is just perfect. Okay, let me just find another Rockwell painting. Oh, this one's even better. Here's a boy writing something on a barrel, and I hope the resolution is clean. But look at the detail on the scuffs of his shoes over here on the bottom, his lower shoe. Okay, look at the detail in the way the barrel is weathered. Okay, and if you look at the dog's nose, you can even see the little individual hairs right under his nose sticking out. Oh, give me 2 minutes. I just realized something. I'll be right back in about 30 seconds.